Now, the National Petroleum Authority, NPA, has moved to calm fears among Ghanaians, assuring the public that the country has fuel stock to last several weeks despite the escalating Middle East crisis following recent Iran attacks and regional tensions. While speaking on Joy News' The Probe on Sunday, the Director of Economic Regulation and Planning at NPA, Abbas Ibrahim Tasunti, acknowledged that Ghana, as a net importer of petroleum products, will inevitably feel the ripple effects of the global oil market disruptions. However, he emphasized that the authority has robust measures in place to ensure consistent supply and also shield consumers from immediate shortages.
Ghana will definitely be affected, just like any other country in the world. So the focus will be what plans we have in place to ensure that consumers do not lack fuel for the economy to run. So as you asked, what is Ghana's current stock level of petroleum products? As of last Friday, we have diesel stocks to last us over 5 weeks. Estimated roughly, it will last us up to 5.3 weeks. And then for petrol, we have almost 7 weeks, 6.8 weeks to last. And this is something that we monitor all the time. If you know that for a country like Ghana, which is a net importer, even without this war, we always ensure that we have a plan to make petroleum products available for consumers in the country. And so this is not something that is being done because of the war, but it's something we do on the regular. It's one of NPA's major mandates to ensure that petroleum products are always available. So as of Friday, like you've said, the last monitoring that we did, petrol again will last us up to almost 7 weeks, 6.8 weeks, and diesel will last us about 5.3 weeks. But just to add that this does not mean that we don't have imports coming in. We discharge petroleum products almost every day in this country. So we have a plan where almost every day discharge of petroleum products have been done. That is for the imported products. And we also have the Central Oil Refinery, which is consistently producing. It has been doing so since June last year, June 2025. And as we speak, they are producing on a daily basis and putting petroleum products on the market. The Atuabo gas processing plant is also producing and putting LPG on the market. So in terms of stocks, whilst we consume what is in tank, we have a plan of import, for import as well. We have about 4 vessels at the anchorage as we speak in Tema, which are waiting to discharge 2 cargoes for diesel and 2 cargoes for petrol, and other imports are also scheduled to come in. So for now, to answer your question directly, we have products to last the country for almost 6 and 7 weeks for petrol and diesel and petrol respectively. So the stocks I've mentioned includes both local production and imports. So these are stocks in tank. But like I mentioned, for local production, it happens on a daily basis. So every day they are producing, it comes to add to the stocks we have.
Now, what volumes do we get from the Middle East, to be specific? So we understand if this war, in the unlikely event that it extends to a month or beyond, so we know how much of oil we're going to be losing from that region, especially now that that channel has been closed.
So to be specific, Ghana, as a West African country, we do not import petroleum products always directly from the Middle East. And let me be specific, Iran in particular is not a source of petroleum products directly to Ghana. However, it's a global market. We are in a global village, and therefore, whatever happens there will definitely affect us, like I said. So our focus here is, like you mentioned, the Strait of Hormuz is a key shipping line. And the impact that we are going to have is that immediately we are definitely going to see prices go up. The world is very well supplied with petroleum products. So immediately, the concern is not that there will be shortage of petroleum products in the world. The concern is about how freight is going to be impacted.
The Executive Secretary of the Chamber of Petroleum Consumers, COPEC, Duncan Amwa, has also warned that the ongoing hostilities in the Middle East will significantly impact the next shipments, leading to higher prices at the pumps. This comes in the wake of assurances from the National Petroleum Authority that the tensions may not affect the current fuel supply. Mr. Amwa explained that while Ghana currently has enough stock, private traders are already factoring the crisis into their pricing decisions for future cargoes.
I do monitor a lot of these international platforms, and most analysts are cautioning that you'll be doing above 90 by close of tomorrow. 100, we haven't discussed that yet, but most likely by close of trading tomorrow, the figures may not look as good, especially now that some 3 tankers have equally been blown off the Hormuz between the weekend and now. It is not likely any cargo at all whatsoever has been able to move. And like Abbas said, these are cargoes that would feed China and would feed India, would feed other parts of Asia. Once these cargoes, about a fourth or 20% of global cargo supplies, do not move, what you are actually getting is a situation where the world would then be scrambling for the remaining 80 or 75% still floating. And that would mean that money would rather be chasing cargo, and people will be paying higher premiums for cargo that they probably a week ago would have paid something less for. So, like I indicated, the start of a trading week tomorrow would give us a fair idea whether we are doing the 70, 80, 90, as some analysts have already pointed to, around 90, 91. That's the expectation tomorrow, or by close of trading tomorrow. But if it doesn't, and it stays within the 75 region, that in itself would have amounted to almost 8 to 10% within a few days.
Caleb Zulim is with our research desk here at Joy News and joins me with why we should care. Caleb, let's begin with the current price of crude on the world market.
Okay, so the current price of crude is about $79 per barrel. We ended Friday at $72 per barrel. And then because we're in Africa, the trading day starts around 10 a.m. So it's now past 10, I think 20 minutes past 10. That's when trading actually begins. But then in some parts of the Middle East, they've been trading for the day, and then that's where the oil price went up to $79 per barrel. When the US is fully active, that's after 10 a.m., that's when we see active trading, and then that's where we'll determine where the price of petrol or crude oil will remain for the day. Now, understanding why this is a hot topic now, we have to understand the climate of the Middle East. And now, the war is just between Israel and Iran, but because the US is involved and the US has bases in other Middle Eastern countries, Iran has decided to attack these other countries. So Kuwait has been attacked, Bahrain,
UAE,
Qatar, UAE, and now Saudi Arabia. Before I came on there, we got indication that one of the largest crude oil processing plants in Saudi Arabia
has also been attacked.
So this is about 30% of the global supply of crude oil on the market. So if the Middle East is being unpredictable or unstable, you'd know that the price of petroleum products on the market would rise. Again, Iran controls this very important part, the Strait of Hormuz. Now again, because all these countries here are oil-producing countries, when they are taking their oil mainly to the Asian countries, that's China, India, and then some of the other, Pakistan and the rest, they have to pass through this channel. And now effectively, this channel has now been blocked. So if you block this channel, about 20% of the total oil production is not going to pass through again, unless they reroute it through this other side. It's going to take so much money. So once they do the rerouting, we're going to expect to pay more in petroleum products. Okay. So again, this is why this is very important for Ghana, because once supply has been affected, the price of crude oil on the international markets is going to rise. And once that rises, we feel the impacts in Ghana here. Now, we're talking about the price of crude on the markets. I want to take you back to 2022, and that's when Russia invaded Ukraine. We saw the high of $78 per barrel when Russia invaded Ukraine in February 2022. We just opened trading day, and we're now doing $78 per barrel. In fact, it was almost 79 for some time. So we're almost at the level where
it was
when Russia invaded Ukraine. And you can see before that, we're on a downward trajectory from highs of around maybe 65 or so. We're coming down, which is 60, why, exactly, 59, which is why last year, petroleum products in Ghana were doing very good. In fact, we got to 9 cedis per liter for some time. This was one of the main reasons why that happened. So now again that we've seen that the price of crude is going up, currently at $78 per barrel, it means that Ghana will be impacted. Now again, the two main factors that determine the price of oil in Ghana are, one, the price of crude on the market, and then the value of our currency. So if your city is doing very well, the impact should be a bit minimal. And this is where good news comes in, because the price of gold has been going up. So Friday, gold was $5,100 per ounce. We're now doing $5,400 per ounce. Now, this again because of the Middle East uncertainty and more traders out, deciding to move their assets to gold. So once that happens, the price of gold goes up and directly impacts the value of our currency. So even though the price of petroleum products has gone up to the levels where it was during the Russia-Ukraine war, gold is holding on a bit for us, and we might be lucky in a few months or so. That's until, that's depending on how long the conflict's in the middle.
Yeah, I was going to ask you that because COPEC is saying that we have enough stocks, but if this prolongs, we'll definitely run out. What do we do then?
Yes, and also the stock that we have is not for the governments of Ghana. It's not for the private players, the BDCs. They have the stock.
And they determine pricing.
They determine the price. So some of the players can decide to release less onto the market, or they release what they have onto the market, and then price is very high because they assume that in the next few months, petroleum on the market, again we showed, is going up. So if they're going back to refill their stocks, they'll be paying more in the next month or two. So they have to make the money now. So some people, even though we have the stock, some of the players might decide to increase their price a bit. But then luckily for us, today, Gold just announced their prices, and they've not gone up too much. Currently, Gold is doing 11 cedis for petrol, and then 12 cedis, 88 pesos for diesel. So even though there's some uncertainty, the market players in Ghana have not priced that into the price of petroleum products on the market yet. But then that depends on how escalating the matter is in the Middle East. If it goes up too much, we're definitely going to see some private players on the Ghanaian space increasing the price of their petroleum products very high, because the assumption is that when they go back to restock, the price of the product they buy from the international markets is going to be very high, and they need to make the money now before they can get up.
And the ripple effect is that if fuel prices go up, transport fares will also go high.
Exactly. Once fuel prices goes up, transport fare goes up, food inflation will go up because you have to travel to the rural areas to get the produce and bring them down to the urban centers. Once food inflation goes up, overall inflation goes up again, and then it's a cycle. And that's what happened in 2022 when Russia invaded Ukraine. But then the difference this time around is that we have a stronger currency. Back then we didn't have a strong currency, which is why we felt the impacts very soon. But then luckily for us, gold is doing very well. So once gold continues to do very well, the impacts might be a little bit minimal. Okay. But then again, it depends on how long this conflict goes on in the Middle East. So
the only way this would end or would not happen at all is if the Middle East tensions are de-escalated?
That's one side of it. But then, remember last year, Israel attacked Iran. Yeah. Same time last year, I think 2025 May or so. When that happened, even though the early part of the market was very jittery, in fact, if you look at the trend here, it's around the side that they attacked. So it went up from lows of about $60 to about almost $70 per barrel. But then a few days after the conflict, it went back down, even though they were still fighting in the Middle East. So some traders have already gotten used to the tensions in the Middle East, and even though there's some uncertainty there, they know that this will end very soon. So they don't place too much premium on the price of crude oil on the market. So even though there's some uncertainty, some people say, oh, this always happens, so we're going to keep our prices where they are. And the other side to it, that there's oversupply of crude oil on the market. And then OPEC says they're going to increase production in April 2026. So once that happens, there's going to be so much supply of crude oil on the market, the prices should not go out of hand.
Okay, thank you so much, Caleb. And that's Caleb with our research desk. Also.